Hey guys, welcome back. Okay, today we're looking at Forex Risk Management. You asked and I'm delivering now. Okay, I believe most of it is from the crypto risk management, and for Forex traders who haven't found a risk management strategy yet, they want to know one, but I got you covered. And some of you might have already gotten a good risk management strategy. This video might not be that useful for you. But if you've not, stick with me. It's going to be a very short video, so um, I'll try to make it as short as possible. We have different sites for forex management. Most people fancy the FX book, but I don't really use that. Most people fancy baby pips. I don't really use that. I don't use that at all. Most people just stick to calculating the pips and all of that. But in crypto risk management, I made it out to understand that you don't choose your margin. You set your leverage, you understand your position size, and you let the exchange do all the calculations for you. You don't choose the margin you're supposed to enter with in a single trade. That's the same thing for Forex. What if I told you that in Forex, you don't choose your lot size you're supposed to enter in a single trade? Yeah, you'll be surprised. For most of you, you're not surprised, but for those of you who are just hearing this for the first time, this is it. You are not supposed to choose your lot size. You don't do that. Your head is not calculated, or you're not balancing the equation there. Alright, so for risk management, I'm not going to type anything out, so you can be with your notes, write them down as I say them. Number one, you don't want to risk anything more than 1%. If you're risking more than that, you're an aggressive trader, and I don't risk more than that. You're not risking anything more than 1% of your whole portfolio, of your whole balance. That's how it goes. Let's say you take a trade, you're risking 1%, and your initial account balance is $5,000, and 1% of $5,000 you all know is $50. So you're risking $50 for that single trade, and unfortunately you lost that trade. What most of you do is you enter the next trade with either 1% or 2% or 3% over risking, hoping to make more of that. That's very poor, and you lost your account as soon as possible. You do that. Most people stick to not changing their risk. Well, that's for you, and I hope it's working fine for you. I'm not here to um, blaspheme other people's strategy of risking or money management. I'm just here to tell you how I do mine. If you find it useful, you can go and apply it. Okay, so everybody have their own different strategy. Everybody have different personalities. I'm not here to shape everybody to my personality or how I do my things. Okay, before you go about saying all sorts of things. So I spoke to a guy recently, and he said after he takes a loss, it doesn't reduce his risk. Well, that is for him. That's no strategy. Like, you risk a 1%, you took a loss, you lost that 1%. You're taking the next trade, you're risking the same 1%, and you take a loss. Unfortunately, 2% is gone, and you're taking the third trade, you still risk 1%. Unfortunately, you lost the trade, 3% of your account balance is gone. And that could happen in 2 days or 3 days. They are different and they are bad market conditions. You're not supposed to be. You're supposed to manage risk at all costs. But what I do is looking at the long run. I don't really fancy the make money quick mindset. I look at the long run. I'm always for the marathon, not the sprint. So if you should take a loss, you're risking 1%. Remember, you're not risking nothing more than 1%. So your starting balance is supposed to be written out on your trading journal. You've written out your starting balance of, let's say, $5,000. That's your starting balance of $1,000, $10. What did you deposit? That's what I mean. What did you deposit? What did you start? If you take your first trade, you're risking 1%. You're taking your next trade, you're not supposed to be risking 1%. What I do is I either risk 0.5 or 0.75%, depending on the trade setup, right? So if you're taking your next trade, it should be less than your initial risk. Instead of you losing about 2% in a single trade, you'll be losing just 1 point something. So you take a loss, you're risking 1%, you take a loss. Your next trade, you should be risking 0.75%. Unfortunately, you take a loss. Your next trade should be what? 0.5. Unfortunately, you take a loss again. That's 3 trades. Your next trade should be what? 0.25. You should just keep going like that. I know it will take time for you to get back, but you should just keep going like that till you get to your actual starting point. Now, when you get back to your actual starting point of $5,000, then you can now start from risking 1% again. I hope you get my point. I'm not telling you to risk 1% first, then you take a loss, you risk 2%, you risk 3%. That is very, very poor. That is a very, very bad risk management. That is not risk management at all. That's gambling. You're scared and you're too greedy because the market have taken from you and you want to take times 2 back from the market. That's what you're doing. There are different types of risk, aggressive, conservative, hybrid, but my risk is just conservative. I risk less. I just follow the protocol. I'm into the marathon of the sprint. Alright, so now, as I'm saying, like I was saying, how do you know what you're supposed to risk? Because most of you choose the lot size you're supposed to you calculate all those pips and all of those stuff. Well, some guys are really good at it, but I don't really use it. It's time wasting. So I have a $5,000 account. Okay, let me write that down. I have a $5,000 account, right? And this is my initial deposits, like my starting point, $5,000. What I'm going to be risking in this balance is 1%. Now, how do I get the actual 1% to risk? Some of you want to calculate pips of that lot of the loss or whatsoever you do. Let's look at a simple example here. Okay, so let's say I wanted to I wanted to buy this coin from here. I'm using like an imagination, okay? I don't want to use the bar replay and all those shit. Let's say I wanted to buy this coin, like just assume this is assumption. Okay. So I want to take this trade like this. What is it are you supposed to do? Some guys will come to their position or they want to calculate the pips from the scale or whatever they do. But for your position 2, like I told you in Forex, there are writings here you shouldn't joke with. The write-up says you shouldn't joke with. Sorry, like I told you in crypto risk management. For Forex, if you want to know your pips of your profit, is written here after targets. Let me increase the font so you see that very clearly. You can see your pips after targets. This is the profit, a profit target of 127.9 pips. A lost target of 17.8 pips. So that's how you know your pips and all of that. But how do you actually know that? How do you know the actual lot size for you to put on your MT5 platform? That's if you're not trading with TradingView. For you to put on your MT5 platform and trade. Most people stick with the currency pair, but I don't trade currency pair. I trade Nasdaq US 100. That's why I don't use the FX book or the baby pips or whatsoever it is, because they only support currency pair at some point. Now you have to go to your browser, whatever browser you use, open up the site cashbackforex.com and you look for lot size calculator. There's Forex calculator, there's PIP calculator, lot size calculator, Forex rebate calculator, profit calculator, drawdown calculator, Fibonacci calculator, and all of this stuff here. But that is not what you're looking for. You're looking for lot size calculator because you want to know your actual lot size. You're supposed to enter that trade with. Why? Because I said you're not supposed to choose the lot size you're going to trade with. Just like crypto risk management, you understand your position sizing, You set your leverage. You're not supposed to choose your margin. You just put your position size, set your leverage, and the exchange will automatically calculate what margin is supposed to hit for that trade. Now, this is what this side does for Forex. So, whatever you're trading, you come to instruments. You can search whatever you trade. You have US 2000, US 30, US 500, and all sorts of currency pairs. There are lots and lots of instruments here. Also, there are cryptos here. That's if you want to trade crypto on MT5 platform. So there are a lot of cryptos here, and there are a lot of currency pairs here. What you just need to do is just search for it. So I'll stick to US 100 because that's what I trade. So you can come to this site, go to lot size calculator, and search for yours. Now, my deposit currency is in US dollars. If your deposit currency is in pounds or euros or naira or whatsoever, you can just go about and find your deposit currency and apply that. But my own is in US dollars, so I'll stick to US dollars. Now, what do you do? You come to the open price. The open price simply means the entry price. So it's kind of the same thing. Don't get confused. What is the open price for this trade? I wanted to take that we assuming to take. The open price is around 12,240.9. As simple as that. You just come and put your 12,240.9. Okay, 12,240.9. That's my opening price. Right? This is what you do. You just it's similar to that of crypto. Now, what else are you doing? You're inputting your stop loss price. What's your stop loss price? The stop loss price there is 12,223.1. So that's 12,223.1. Now you can see we've inputted everything we need to input. Next thing for you to do is input your account balance. So we have 5,000 with us account. Put that 5,000, and our first risk is supposed to be 1%. Right now, make sure your risk is in percent, not in dollars. Your risk is in percent, right? That's what you want to do. So this site gives you all the information you need. You've input your instrument, that's NASDAQ. For you, it could be Euro USD, GBP USD, whatever. You've input your deposit currency. For me, it's US dollars. You input your entry price or open price, however you want to call it. You've input your stop loss price. You've input your account balance, and you input your risk. Now, this risk is not something that's constant. You need to be updating it as you trade. Whether you're in drawdown, you update it to 0.75 or 0.5. Whether you are on profit, you can just update the account balance and leave the risk. Leave it to percent, and what you just need to do is calculate. Now, for your currency pair, like GBP USD, Euro USD, for your Forex pair and all of that, it will give you the actual lot size. But you can see for NASDAQ, it's not giving me the lot size. But the lot size is the same thing with the units, because NASDAQ has a one contract. How is that possible? Let's see. Okay, there's a question mark for lot size, but if you click on it, you see the contract size. Unit per lot size for NASDAQ is just 1. So I'll leave that one there and I'll calculate it again. So now it's giving me lot size of 2.809, which is the same thing as the units, 2.809. My money at risk is $50. That's 1% of $5,000. Now you see, I did not just go about randomly choosing the lot size I'm supposed to use in this particular trade. The trader has given me, or the site I'm using, this particular site, have given me the lot size I'm supposed to use. What I'll just do is go to MT5, set my entry price, my buy limit order or sell limit order, set my entry price, then input my lot size, set my stop loss, and place my trade. So that's how I do my Forex risk management. Okay. It doesn't just stop there in finding your position sites. It doesn't just stop there in finding your position sites. You need to know how you meet with losses, deal with losses, deal with profit, and all of that. If you should take this trade, assuming you take this trade, and there's another way to do this. Like for those of you guys that wants to know how much your profit will be, you can still use this position too. What you need to do is come to the settings, set your account size to $5,000. The only difference here is that this one won't tell you what lot size to use. But you can set your risk to 1%, $5,000, 1%, and just click OK. What it will tell you is that if you should lose this trade, remember what I explained in crypto risk management. What is telling you that if you should lose this trade, you'll be left with $4,950. That's 17.8 pips. But if you should profit this trade, you will be with $5,359.27. That's just how it is. But the only thing there is that the position to your trading is not telling you what lot size to trade with, but it's giving you a whole number of quantity. This quantity here is the same thing with the units here. So this one is giving you with the decimals, but TradingView is not giving the decimals. It's just giving two. TradingView on Nasdaq doesn't give decimals. It just give you the whole number. That's the quantity. That's why I prefer using this site, because to give you everything in details what you're supposed to use. 2.809 is the lot size you are supposed to use in this trade. Now I can go about doing examples on different forex pairs like Euro, USD, GBP, but there's no need for that. It's just the same protocol. You come to instrument and find your pair. If you trade GBP USD, you search for it, you see the right GBP USD. Now the only thing here you need to understand is that how do you approach these losses if you trade them? How do you deal with them? Like I said, most people are aggressive risker. I'm not an aggressive risker. They take a loss, and they take a loss of 1%. They still take another trade of the 1% risk. They lost that trade, they still take another trade of the 1% risk. I don't do that. That's not my pattern. I'm not telling you to be shaped to my pattern. I'm just giving you or telling you how I do mine. I take a loss of 1%. My next trade will be 0.75. I take a loss of that, my next trade will be 0.5. I take a loss of that, my next trade will be 0.1. But I cannot have such high amount of losing streak of about 10 losing streaks. So I'll hope to come back. That's if you have a good risk to reward ratio. You can take a trade of about 0.5 risk and cover all your losses, like you're back on profit, right? So this is just how you go about with these stuff. I hope this video is insightful. It's not really much of explanation, but it's just much details which you can go about, use them, utilize them. It doesn't matter whatever you trade, it's fighting forex, whether it's okay, that side doesn't contain futures contracts. It doesn't contain futures contracts. It's just forex pairs like US 100 and the rest, like GBP USD, Euro USD, and whatever you trade. I trade Nasdaq, so I just deal with that. Alright, so we are looking at Tuesday trading. Monday was bank holiday, USD bank holiday, so it was too like slow. I traded nothing. I'm looking at trading Tuesday, hopefully for a short, probably for a short. It might be in a bearish market today. I don't know yet. Let's see so until next time. And please, if you find this video insightful, do want to share, subscribe, like, comment something nice. That'll be very, very helpful. At least to motivate me to do more. And until next time, be safe.